What is price action? Price action is exactly that, the action of price and how it moves. Okay? It is easy to lose what price is when doing technical charting, as it is never often as discussed compared to indicators, support and resistance, etc. Okay? We are always buying or selling at a certain price, and we make technical decisions based on patterns and trend following. Technical indicators should not be used for trading as they are lagging indicators. In a bearish trend, the higher price goes, the more attractive it becomes to sell. In a bullish trend, the lower price goes, the more attractive price becomes to buy. This advice will save you hours of trading time. Figure out the trend, know where you are on the chart, and trade in that direction. This will save a lot of confusion. Keep your charts clean all the time. Less is more in trading. Look for important support and resistance zones and Fibonacci retracements rather than overbought and oversold conditions. For example, on our left here, we have a chart with about 5 or 6 indicators, and price is very, very, very hard to see. On the right, we have Euro USD on the 1 hour, and we drew trend lines, and we see we have a wedge. Okay? Now, we have a break and a retest, and then off we went for 250 pips. Okay? Keep your charts clean. Don't put indicators on them, as they can have a psychological toll on you. Okay? Trade what you see based on patterns and retracements. Top-down analysis. We start on the highest possible time frame and move all the way down to the 1 hour chart. Anything less can be very confusing and take a psychological toll on you. Figure out the trend on the higher time frame and trade the lower time frame based upon the trend. Are there any patterns? What are the candles saying? Do we have any trend lines? Are the moving averages crossed on the higher time frame? Where is the next important level? And where is the next retracement wave? So, let's start on our monthly time frame. First thing we do, we go on our monthly time frame, we have a clean chart, we put our Fibonacci levels. Okay? Now, put our Fibonacci from top to bottom, okay? And this can be daunting because we went from 195 all the way to 117, okay? But again, remember, we're on a monthly chart, okay? So, what is it telling us? To start off the year, off the 50 level, we had a bearish engulfing, okay? So, a bearish engulfing on the monthly can easily alert us that, okay, price might want to go down, okay? Now, so we have the engulfing and the retest, okay? So we want to start trading up to here, okay? We never closed below the 38.2, okay, which is fine, okay? But you won't see as much as you will on the weekly and the daily on the monthly, okay? Just to get an idea, okay? Because sometimes you'll get nice candles like this, okay? Which we know are reversal candles to, you know, sometimes you'll get a pattern like this. This is a reversal pattern as well on the monthly. So the monthly doesn't tell you as much, but it's also always good to see where you are on the monthly chart and see where there is support and resistance, okay? So for example, here we had resistance. Why? We have an area here, okay? So you can see that the engulfing actually broke this, okay? Which means that maybe we could look for a retest and a sell off of this level, okay? We'll go on the lower time frame now. So on the weekly, we can see it's much cleaner, okay? We have many more candles, okay? And we can see what price is doing. So the engulfing I showed on the monthly is actually here, okay? So we retrace, okay? This would be about 70.5 retracement, okay? And we create a lower high, okay? Why? Because we get bearish tweezers here, okay? So what is a bearish tweezer? It's this pattern exactly right here. One bullish and one bearish candle back to back, okay? That are the same size, okay? At the high or low of retracement, okay? So, or wait. So we have our lower high here. We build our lower low, retrace, lower high, and now we know that we're going to go lower, okay? So with your Fibonacci tool, you could actually put future targets, okay? And this would probably be the first target, okay? And then from here, okay, we can see that we also retraced and made a lower high, and then are we looking for a lower low? Okay, a lower low would be below this level, okay? And so this is what we could be looking for since we are in a bearish trend, okay? Another thing to look is the size of the bearish candles compared to the bullish candles. So we can see we have 1, 2, 3, okay? We have 3 engulfing candles on this chart, okay? Now, for starters, if we don't have all this, okay? If we have this, major engulfing candles like this can let us know that, okay, we might be in a bearish trend, okay? So let's look for reasons to sell. Let's look for a retracement. And another thing is, what are the fundamentals saying? Okay, so if the fundamentals are telling us that we might want to sell the pound yen, okay, then we'll look for reasons to sell. Okay, it's that simple. Then we go on our daily. Okay, so what do we do on our daily? Okay, we draw our fibs from one wave, from the swing high to the swing low of the wave. So the engulfing pattern that I showed you on the monthly, okay, is right here. Okay, we can see this, all the candles between this line and this line equals the 1 monthly candle. Okay, we can see how far price dropped. Okay, now we draw our fibs from top to bottom, okay, and we wait for a retracement. What would be a pertinent retracement? Okay, usually what you want to look for is a 61.8 level. Okay, 61 point level is a very effective level. Okay, so 61.8 here, we get a bearish candle. Okay, bearish candle, and we would enter short on the next day. Okay, now it goes against us. Okay, but usually on the when you're trading the 61.8, okay, you want to place your stop loss 10 or 15 pips above the 78.5, okay? What this does is it gives you a safe zone, because once price already gets to the 78.5, usually means trade is invalid, okay? So we can see break and retest, okay, right here of the 61.8. So we see if we were to short here, price would go against us, okay? It would come back down and retest it, okay? The break and retest, okay, of a fib level or support and resistance level is very, very effective, okay? So here we have the break and retest of 61.8. Our stop loss is up here, okay? And we move down for approximately almost 1,000 pips, okay? From here to here, okay? So that's one wave, okay? Now that we're making new lows, we see that do we have a potential bullish reversal? The third hit of a trend line. A break means further downside pressure. So we'll wait to see what this gives us, okay? So we can see we draw a trend line from point here to point here, okay, and we extend it. So today, or on this day, price would be here. So we wait to see how this candle is going to close. Are we going to close heavily below it? Are we going to close above it? Okay. We wait on this to give us a reason, okay, to buy or sell, okay? We could continue selling if it breaks through the candle, okay, or if it gives us a nice close, a nice reversal pattern, or something, we could maybe think that, oh, maybe we want to buy. We'll see, okay? We know the overall trend is bearish, okay? So chances are you want to probably just look for reasons to sell, okay? Then we go on our 4 hour, okay? So, so we draw our fib level from top to bottom, okay? Top to bottom, okay? And we wait for a reversal, okay? So the 61.8 here, perfect. Pardon me. 61.8, we have a head and shoulders pattern, very slight, but still there. Okay, and we drop right away. Okay, all the way down to here. Okay, so we have, and then at the end we put cubes here. Okay, why do we put cubes here? So we can see that we're forming higher lows. So higher low, higher low. This is a higher low right now. That's also why we drew the trend line. Okay, so we're going to see that if we break past these levels, that means we have much more room to go. But if we respect this trend line and start moving up slowly, okay, and go over this level here, okay, then that might mean that, oh, we may have a case to buy. Okay, so we will continue to watch this. The last time frame you want to look for is the 1 hour time frame. Now, one reason I don't like to go below the 1 hour is simple. There's too many candles to look at. Okay, after the 1 hour, you have your 30, you have your 15, 5, and 1 minute. There's way too many candles to look at. There's way too many candles to look at, and it can take a psychological toll on you, as I said before. Why? Because you think that an engulfing on a 5 minute is as effective as an engulfing on the 1 hour or the 4 hour. Not at all. Okay. If you find a pattern on a higher time frame, okay, and a lower time frame, you'll see that it's always much more effective on the higher time frame, which is why you want to look for reasons. Look for the patterns on the higher time frames, and it will ease your trading as well. Okay, you'll take less trades. There will be more profitable trades based on the patterns. Okay, you'll save yourself a lot of time and confusion. Okay, so on the 1 hour here, we draw our trend line from 30th of July. Draw it 1, 1, 2. Okay. We didn't even get a third bounce. We just broke it entirely, retested it, and closed below it. Okay? Because we closed below it, now we can wait for another retest. And you see we get the retest here, and we drop. Okay? We drop for about 100 pips on the day. Okay? Now, if we wanted to enter more shorts here, it'd be wise to wait for a retracement before entering short again. Okay? Now, that might not happen. Price may just continue to drop all the way to the next levels. Okay? We never know. But it is also always much more safer to enter on a retracement rather than it is selling lower lows. Okay? So we could see that the monthly time frame didn't tell us much. Okay? The weekly let us know that we kept forming lower highs and lower lows. The daily time frame confirmed the downtrend. Okay? And we drew the Fibonacci on the daily, okay, which let us know that when the next retracement was coming. We then used our 4 hour and 1 hour to look for sell trades. Okay, very simple. Thank you for watching, and we will see you in the next presentation.